have done a lot of activities this week. Let me just quickly do a recap of what we have covered so far. We saw the importance of financial accounting and why managers need to understand financial information for decision making. We understood what is meant by financial accounting and concluded that financial accounting is meant for measurement and reporting the business transaction. Financial accounting information is useful for several uses. We met a banker, an analyst, a government regulator and others. We understood how they use financial information for their decision making, thus making this document a very important source of information for decision making. We then move to understand how the accounting system works or how financial information is captured through the accounting system. Like any system, accounting system also has three parts: input, process and output. Input of monetary transaction and events. Anything that cannot be expressed in money terms or does not have monetary implication are not captured in the accounting system. Once it is captured in the system, there is a process. This process happens through a mechanism called double entry system of bookkeeping. We have not looked into the double entry system because we know that in today's world there are sophisticated systems, maybe an ERP package or others that do this job. But do we need to understand a little bit of the system? Answer is yes, and that we captured it through the accounting equation. But more important for managers is to understand that the process that happens are based on certain rules, and these rules are called as GAAP rules or accounting standards. We also saw that there are several types of or several sources of accounting standards. In the US, we have US GAAP. In certain countries, they have local GAAPs. But more importantly today, there is International Financial Reporting Standards, IFRS, which is adopted by more than 100 countries around the world. All accounting have to be based on these rules, and they help us in measurement and reporting of the financial transactions. At the end of the process, reports are generated that are useful to the users. The three major and important reports are the balance sheet, the income statement and the cash flow statement. To elaborate a bit more, we said balance sheet is a statement that captures the assets, the liability and the equity of the business. The income statement captures the income and the expenses of the business, and the cash flow tells you how much cash flew into the business and how much outflow of cash went out of the business. We also saw the three important accounting concepts, but remember there are many other concepts, but we have started with three concepts, which are the entity concept, the going concern concept and the cost concept. More concepts in module 2 and the next module. After that, we looked at the accounting equation where we said assets are equal to liability plus equity. And remember, this equation should always balance. You cannot have a one-sided equation and leave it without balancing. The equation must always balance like the way it should in a simultaneous equation. And lastly, we prepared the balance sheet of Raj's business. Hope this was interesting to you, and we will look forward to meeting you in the next few modules. Thank you and see you soon.